Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, July 31st, 2024. So the last trading day of the month, the bulls really slammed it home, and I had put in the morning notes that I just kind of had a feeling that that Powell was going to cut rates, and really my main reason for it was just seeing the S&P up 72 points the day of a Fed meeting. So it kind of had me thinking it was going to happen, but anyway, it didn't. We still went up a ton of points today. We had a couple straddle trades. One was AMD, which we took some off. I wish we would have taken the whole thing off at the highs because it was like somewhere in the range of a $6,000-7,000 gain. But we took half off. We still have some time to go on that. But in any case, so we're looking at a 15-minute chart here. You can see the pretty powerful move. We made it. What the whole thing was getting above the 5,500, and then once we got above the 55.15, that was the volume trigger. And as you can see, we kind of just went straight up on it. So this is the resistance zone that I had in place right here. So you have the opening gap right here that we closed. And if the bulls can get above it, really, if they can get above this level, we have a 62% retracement at 55.64. But really, I believe that we're going to be coming into the probably testing the 5,600 level. That would make sense. We're on a buy signal with the trend indicator, but we're getting pretty close to it being a sell. But you can see that this gap really changed everything. But we don't have any bearish divergences. So if we come down, I'd probably be looking to buy the 54.95 area, and if it just put a stop at 54.75, give it a 0.5% move on the downside. But you can see we have the moving averages that are converting here. We have actual support line. So if the bears can get through this, then this may be just a one-day wonder, and we're going to head back down again. But we're on an Arun buy signal. If we take a look at the 60-minute chart here, hang on one second. Let me just zoom this in here. Okay, so here, the resistance area, 55.83, 56.18. If it gets up there, that it makes, that's probably where we'll have a little bit of a rest, come back down, and then come up and test these highs. And this is really, if the bulls can stay above that 54.94 level, because if they go back below it again, then, it's going to be kind of a risk-off trade. But right now, you got to give it to the bulls on it. We have this support area right here. This is your resistance. So if you can get in at the 5,500, 54.95, really this would be where I'd be looking to take the profits, anywhere from the 55.83 up to the 5,600 level. And we have to remember, we still have this gap up at 56.60. So there's a chance they come up and close that gap or even break these right now. So it's this is a pretty solid bottom. The bears had chances to really break this market down. They failed, and from here we're probably going to have to see the bulls fail a few times, whether it be at this level or up here. But I'm leaning definitely on the side of the bullish side, but I'm not married to it. I'm just looking at what took place today, and getting above the volatility trigger and above the 5,500. So as long as they can maintain that, then I'll be keeping an eye on the right around that 5,600. Now, if the bears can push through the 54.95, then we're coming down and probably going to close the gap at right around that 54.43. But then again, we're in a risk-off environment, so we want to play it by ear. We got a little movement with the Fed, didn't do anything. We got a kind of a press to the upside, but that fizzled out. So I want to see how things play out tomorrow. Keep an open mind, and with that, I'll talk to you guys in the morning.